Right, we have to do part T, yes. State the effect on each element of the accounting equation if the transaction on the 31st May was not recorded. So what's the transaction on the 31st of May?
31st.
Yep.
Physical inventory take.
Physical inventory take. As a result, what's the outcome of that? We realize that the inventory has been, yes, whatever the inventory card shows is greater than the inventory take. Or in other words, inventory take is lower than the inventory card. So which one do we trust?
Inventory take.
Inventory take, right? Why? Because that's what we can sense, yes? We can touch it, or we can see that, and we know, of course, that is what is left in our store or warehouse at the end of the period. Then, meaning, what happened? So we have recorded something in the inventory out column, meaning we have, what is it? Inventory loss or gain. Was that an inventory loss or a gain? Loss. How much is it? 500. Now the problem is, now let's say if we didn't record this one in the inventory card, we record this one in the inventory card means we update. Now see, before the inventory, what happened? We said we have 5 at 240 each, 2 at 250, 3 at 260. Altogether, we have had how much? 1,480 worth of inventory. So if we had not taken the inventory physical take, right, then we would have recorded our inventory as 1,480. But now what is the story? Now we are saying how much? Sorry, no, this is 1,480, 2,480, yeah? So this would be how much? 1,980. That means 500 lower. So then what would we end up reporting in the balance sheet as inventory? This amount, 1,980 instead of 2,480. Right, now we are reporting our inventory 500 lower. So then they're asking, the question is asking, if we didn't do this 500 inventory loss, or if we didn't record this 500, what would have happened in the accounting equation? Tell me. Inventory would be overstated. Everybody agrees? Overstated or understated? Overstated. Why? Because let's say we didn't record this one, means we would have recorded it as 2,480, which is greater than the actual, the real amount, yes? So more than the realistic amount we are recording. So that means is correct, overstated. Any other assets affected? No. Liabilities? Any impacts on the liabilities? No, Arish? No. Right? No. Then no impact. Then what about the owner's equity? So inventory loss, what would we report? Where would we report inventory loss? Inventory loss is an, what is it? Expense. Revenue? No, expense. Now, do you remember we did the definition for the revenues and expenses? Yeah, what is the definition of the expense? Decrease in assets or increase in liabilities. Right, good. Decrease in assets or increase in liabilities that decreases the owner's equity. Good. Now, then you can apply this one. You can put this one in that format, right? If it decreases assets or increase liability, one or the other will happen. Not both of them will happen with one transaction. So we can't expect one asset will decrease and again another liability will increase. No, only one of them will happen at a time. So then in this case our assets decrease. Very good. Inventory loss is an expense. Okay, don't write. I'll give you the answer.
Yeah.
That's wrong. Right? Very good, right?
I don't know.
Yeah, I think you're on the correct track. Expense. Yeah. Correct. What you have in is correct. Okay. So then, guys, what will happen to the expenses if we didn't record it? Will be expenses will be understated. That will. What will happen to the net profit? Overstate. Net profit will overstate. As a result, it will. So then, overstated net profit will be. Where would we add it? To the owner's equity, because only the owner can claim the net profit. Yes? So then it will overstate the owner's equity. Good. Okay, guys, let's try. Okay, assets. There's only one asset, guys. What is it? Inventory. Then amount is 500. Overstate.
Sir,
Yeah.
I don't think I have the tube.
You don't have the tube? Okay.
I think I might have.
Alright. Somebody asked me to print. Who is it? Puna? You have it there. Okay. Liabilities, what happens? Liabilities. Yep. Liabilities, what do you write? No effect. Do you have to write it? Yes. No effect. Owner's equity. Okay. Now, if you are not 100% sure, just leave to write, just leave space to write overstate or understate, and then let's start the rest. How? Inventory loss. For now, you just had written expenses, yes? Yeah. You had write inventory loss expense. Yeah, that's the correct format. Will be, what is it? Understated. That overstates net profit. How much? 500. Now we know, of course, owner's equity will be overstate. I think grammatically it is overstated, yes. but we don't have to really worry about grammar in accounting or in other subjects except English. You won't get your marks cut for your grammar, but it doesn't mean that you should use wrong grammar. However, try to write spelling and grammar correctly, but you don't have to worry about it. Okay guys, next one. All right, party. Calculate cost of sales. Now, cost of sales we have done, yes? What is cost of sales, guys?
Cost of
Cost of
the inventory.
the inventory?
Yeah.
Yeah? Purchase? No. Yes, cost of the inventory sold. Okay, make sense?
Yeah.
So let's say,
So even if you purchase it.
yeah. So let's say we purchase,
Yeah.
right? Phones,
Yeah.
right? Assume 1,000 each.
Yeah.
We purchase, so let's say we purchase 15,
Yeah.
okay, in the month. However, we manage to sell only 10. Okay?
Yeah.
That means how much is the cost of sales? Yeah? 10,000. 10,000, yes?
Yeah.
Or 15,000.
10,000.
10,000. Make sense? So what it is opposite to what you said, yes? You said cost of the inventory you purchase.
Yeah.
Cost of the inventory you purchase is how much? 15k. But what you sold is 10k. Yeah? Make sense? Still anyone is confused with that? Cost of the inventory that we sold, right? Or in other words, cost of sales means the cost of the inventory or the cost that we incurred to acquire or to purchase the inventory that we sold. Make sense? That's the cost of sales. So in other words, how much you paid to the supplier for the inventory you sold. Right? So then if we sold 10 phones, for that 10 phones, what we paid to the supplier is only 10k. Make sense? However, we will have more complicated things in Unit 3. For inventory, we'll do that when we get there. But at this point, that's it. Right? Otherwise, I can define like this: cost of the inventory. All the costs incurred to bring the inventory into a condition and location ready for sale is the cost of sales. And that's for Unit 3. But don't worry about that now. Okay? Okay guys, now we have to calculate the cost of sales. There are two ways that we can calculate. Because we have the inventory card, there is one method that we can use the inventory card to calculate the cost of sales. Right? This is the method. If you want, I can give you in terms of a note. Otherwise, at this point, we don't have really worry about the note. Right? Okay. What you would do is, now have a look very carefully. Right? What you would do is, you go through the out column. Why out column? Because everything that we sold is in the out. Then you would pick or filter the transactions that are supported by by some specific source documents. So those source documents are invoices, receipts, or EFT. So what did I say? So you go through the out column and you filter the transactions that are supported by the source documents of invoice, EFT, and receipts. Why? Basically what we are trying to pick is the inventory that we sold. Okay, if anybody wants to take it down, you can take it down, right? So the first step is, in the out column, we are filtering the transactions supported by the invoice, EFT, and receipts. Right. Now, what is the first one, guys, according to this question?
Memo.
Memo?
30.
Memo 500? Memo 43?
Yeah.
Okay, what did I tell you now?
Wait, but you put the right order.
Sorry?
Okay, so you don't include those ones.
Okay, what did I say, Pranav? You are picking or filtering the items that are supported by invoice,
Yeah.
receipts,
Yeah.
and EFT. Why? They are the ones we have sold. Memo, did we sell? No. Memo we didn't sell. Okay? Right. So then, firstly we'll add what are the items? 5520 and 4500. Right? So I'll write in the workings for cost of sales. It would be helpful to you, right? 5520 plus 4500. Yep. Then what is the next item, guys? 19th. Yep. Are we picking the 19th? Yes, Krishan? Yes? No, why not? It's in the in column. So in column we don't pick. Okay, next, what is the next one? Which one? 24th. Yes, how much? 1920 plus 3120. So you add them. 1920 plus 3120. Yep. Right. Anything else? Yes. What is it, guys? 30? Yeah? 3900. Okay. Now we have to add all of them. After that, there is another problem. What's the problem? Now, this is, yes, correct. This is what we have. I mean, this is the cost of sales, that what we sold. It's the cost of the inventory that we sold. But also, there is a problem. What is the problem? Some of our customers returned what we sold to them. Yeah, even though we are saying that, look, we have sold it, some of the items were returned. What do you call them? Sales returns. Sales returns cost of sales, or cost of sales of the sales return we have to subtract. See, you guys get it, yeah? It's not a big deal, yep. Right. So then we have to, the other problem is we have to find the cost of sales of the sales returns. Where can we find them? In the in column. Correct. In the in column. In column, how do we find that one? That should be supported by the credit note. Excellent. So that means there's only one. What is it? On the 12th. Yep. 12th we have how much? 1200. You have to subtract that. This is going to be the cost of sales. And now you guys have to calculate. That's your calculator. So now you can't use the phone in the exam. Okay, you are not allowed to get it for now. Anybody? Okay, you have. What else? Let's see your calculator. Sorry?
What was the minus 1,200?
1200 is the cost of sales of the sales return. What is that? We will find them under the in column, supported by credit note. 1200.
Oh yeah. Ask some of my
Yeah, good.
ask some of my friends from year 12, right?
Yeah.
Who do accounting.
Yeah.
They said apparently you don't need any journals.
Journals?
Yeah, in 3-4.
No, there is one journal you need.
Oh.
What do you call it? You didn't ask him? Yeah, that's called general journal.
Oh.
So ask him.
Yeah.
You meet him tomorrow.
Yeah.
I have call and ask him. You said that last time. No generals are coming for an account. What about there is something called general journal? What is that? Okay. Yeah. He's halfway correct, but basically the cash journals and sales purchases journal we don't have to. Complete. We don't have to worry.
Yeah.
But it doesn't mean that for now there is no guarantee that they are not coming to the exam. Why? If anything is in the study design, examiner can include it. So this is the trend. Trend is usually we get 95% or maybe 90% of the content in the paper usually from unit 3, 4. But also remember that we learn internal control, right? Internal control is we learn only unit 1, right? Or unit 2, which is coming to the exam. Usually your teachers, don't teach internal control. You should. Some teachers might teach, right? Still they are coming to exam. So we can't skip those ones. So that having said that, it's not going to come. Still we have to do it. Ask him. Yeah, everyone has. They have the calculator. I scroll down. Okay, tell me guys value.
17,760.
How much?
17,760.
17,760. Others also got the same thing? Alright, 17,760. Okay guys, next one, gross profit. Now before the gross profit, right, we have to calculate sales, right? We have to calculate sales. Hold on, we have to do the sales guys on top of that. I'll rub that part. Right, now we have to calculate the sales. I'll write it here. Sales. Right, how do we calculate the sales? Sales we can calculate two ways. Either you can calculate it by looking at the inventory card, okay? Otherwise, we can calculate it by looking at the question, right? What does that mean? Now in this one, we calculated the cost of sales. Similarly, we have to calculate how many units we have sold. How many units did we sell? Okay, we can take it from the inventory card. Which ones? I'll show you first in the inventory card. Here, how many? 41. Yes?
Yeah.
Then in this one, 24th, how many? 20. Right? And also in this one, how many? 15. That means how many? 76 units we have sold. From 76 units again, what happened to some of them? Got returned. So how many did we get returned? 5. That means how many units did we sell at net? 71. Everyone got it? Then guys, we have sold 71 units. Now we have to calculate it by the selling price. How much is the selling price? Let's have a look. So in some questions you have to be careful. Selling price can change. Okay? Selling price can change. But this one, I don't think it will change. Let's have a look. See this one. Sold 41, selling price 500 plus GST. At that point 500. Okay? Next one. 24th, sold 20 cameras 550 including GST, meaning still selling price is 500. Last one, 30th, sold 15 total. This one is giving us total invoice price including GST. That means without GST how much? 7,500. So 7,500 divided by 15 is 500. Yep. That means still 500. So no problem. So our selling price has been consistently 500 throughout the period. So that we sold 71 times by 500. So it will give us how much? 0, 0, 5, 35, 500. Yep, is it correct? Okay guys, then we have the sales revenue and we have cost of sales. Then we get the difference between those two to calculate the gross profit. Okay, let's subtract it. So this one will say minus cost of sales, right? 17,740. Yeah.
Wait, how do we calculate the gross profit?
Yeah, sales take away cost of sales. If you want, I'll write it here. Gross profit equals sales minus cost of sales. Okay, now guys, we have to do something called adjusted gross profit. Adjusted gross profit means for the gross profit, we simplify the inventory loss or the gain. If you have inventory loss, you subtract it. If you have inventory gain, you add it, right? Okay, let's subtract the inventory loss because we had done inventory loss. How much? Minus inventory loss. Yep. How much? 500. So then you get 17,240. Is your adjusted gross profit. Okay guys, now any questions up to now? Now in part D, you know what we did? Did I show you the income statement last time? I showed you, yeah? No? No? Okay. Yeah, this is, do you remember we did income statement in unit 1? This one is actually the first part of the income statement that we are going to do in the unit 2. What do you mean by unit 2 income statement? The income statement for the trading firms, right? So we have sales, we have cost of sales, and we have one thing called cost of goods sold, which we are doing in next tute, and we have gross profit, inventory loss and gain, and adjusted gross profit. Right? Remember last time, guys, if you remember, like unit 1 for service businesses, but it we use instead of cost of sales, cost of the Materials very good, consume, good man. Cost of the materials consumed, yeah. So instead of that, now we have cost of sales. Okay? Right. Okay guys, now let's go ahead with the theory. I think I last time explained you the FIFO, but I think we didn't do theory. Yep. Please take down the theory benefits. I'm sorry. Thank you. For now. FIFO.
What do you think of the cost of sales like Chinese imports?
Cost of sales of the Chinese imports.
Yeah. Like, is it like a lot less? Because I heard like they sell like really expensive things for like 20 cents. Right?
Hold on. Expensive things, the cost of sales, the real cost is 20 cents. Yeah. Can be. You know why? You know, you guys have iPhones?
Yeah.
How much do you pay for it?
Like $1,000.
Yeah, $1,000 minimum, yes? You know how much the cost is there of the iPhone? Yeah. A few years ago I heard it is $80. $80. See? That means they are making like, obviously it is not 1,000, so more than that, but let's say 1,000. That means they are making $920 profit, yes? From one iPhone. Yeah. However, cost is less. And also I know Chinese products, because you asked me Chinese also have 3 qualities, you know, quality number 1, 2 and 3. So quality 1 can be expensive, like that. However, quality 3 is very cheap. Okay, guys, then we'll do. I mean, not only that, Pranav, not only the products coming from China, like technically, like a lot of goods, cost of sales is like that, very cheap, right? If you are paying like maybe, how much do you pay for a pen? That means how much do you think it's cost?
5 cents.
No, maybe more than that. Yeah, 20 cents or definitely less than 50 cents. Like that. Right? So they are making, see how much profit means. They are making many times of profits as much as its cost is. Yeah. Okay. I think they are going to take out the contract of iPhone from China and giving it to India. You heard it? No. Because this guy, Trump, is, really arrogant with China. And then, they're going to take out those, productions from China. Because iPhone is made in China. You know that? Okay, guys. Physical, sorry, where are we now? Reversing FIFO. Right. Yeah, go.
What's the purchasing cost?
Purchasing cost means like the cost that we pay to the supplier to acquire the inventory, and also the cost that we incurred to bring the inventory into our store. So like what?
Transportation.
Sorry?
Is that transportation?
Yes, freighting, like transporting, cartaging. Sometimes import duties. Import duties. I'll get students. Duties, duties. What is duty? Okay, taxes.
Tax.
Yeah, tariff.
Yeah.
Duty means tax, tariff, right? Import tax. So you pay them. So those are the ones that we consider as maybe like any other buying expenses, modification costs. Right? Don't worry about the costs right now because we are doing again in the next lesson. Yeah. Physical inventory count also you know. Right. You guys are okay with the mainly. Don't worry about the sales return part. I'm going to explain you later. Cost and benefits, you guys are okay. Basically, remember last time we did identified. So the disadvantages of the identified will become
advantages.
Yes. Question? Right? Disadvantages of the identified cost become benefits of the FIFO. Huh? Krishan, what did I say?
The disadvantages
Of the
of the identified cost
becomes the benefits of the FIFO. Right? So for example, FIFO we can apply for any type of product. Remember last time, could we apply identified costs for any item? No. Right? So then the second one, the administration cost is lower than the identified cost. Then the other one, benefits of the identified becomes cost of the FIFO. However, there is only one cost or disadvantage in the FIFO, right? So the only thing is, FIFO, remember, it's an assumption, right? FIFO being an assumption. What is the assumption? What's the assumption we made in FIFO? The inventory that comes first to the store, right, is assumed to be sold first. That means, remember the example I gave you with the markers? So whatever the inventory that is coming first is assumed to be picked by the customers first. Right? It is an assumption only. However, as a result of that assumption, people can argue that the valuation of the inventory under the FIFO is not perfectly accurate. But don't worry, we don't have to be like nothing is perfect anyway, so that we don't have to really worry about that. But that is the only disadvantage that if they are so far, we see, I haven't seen that they are asking about the cost of FIFO. But I put it because in case it comes to, even you check the textbook, they don't have. In case, right? In case if it comes, you can write it. Right. Okay, guys. Now we'll do the FIFO question. Okay, you guys can read the question. How do you read the question?
Requirements.
Sorry?
Look at the requirements first.
Sorry?
Look at the requirements, glance.
Yeah, glance through the question and then go to the requirements. Good. Now I'll do it. Right. So what are the requirements, guys? Explain how inventory is valued under the FIFO method. Discuss whether cameras should use identified cost. Record the transactions for May 25, and then calculate the cost of sales. Okay. Right? Firstly, we don't have to really worry about the question to answer the first one. However, guys, right. What is the question? Cameron Diaz's cameras use FIFO. Well, to value its inventory as at 1st May. Alright, so we had 30 GoPro cameras, 240 each, and so on. Right? Shall we do the part C first? Yeah, do part C first. Because the other questions I am not really interested. We'll do because I want to teach you, like, before we finish today, how to do the question. I have done halfway through, but I'll rub it. Okay, firstly, guys, there is a small printing mistake. The balance is saying 30, but it says there 40. So please fix it. 30 at 240, which is 7,200, yeah? Okay, next one. May 2nd, purchase 10 cameras for 240, right? Invoice C740. Okay, May 2nd, invoice C740. We are purchasing, that means in or out? In 2,400. Then our quantity increases to 40, same price, so that we can add together 2,400, which becomes 9,600. Next one, purchase 22 cameras for 250, C745, right? We are purchasing 22 at 250. So still it is in 250, meaning 5,500. So then what do? We repeat the 40 at 2,400, and then you record 22 at 250. Sorry, I made a mistake here. Should be 240, not 2,400, sorry. 250 at 5,500. At 250, which is 5,500. Yep. Right. Then 4th, sold 41 at a selling price of 500. Right. Now remember the identified, they had given us this many items at this price and so on. But this one, no. Then what do? Okay, 41 at 500, yes? So then invoice 76. Then what do, guys? So we'll say invoice 76. In or out? out. Meaning, we will issue, which one?
40,
Sorry? 240? Okay, 240. But we can't issue 41, yes? It's because
one of them is 2.
one of them will be 2. Yes? Yeah, we are issuing firstly 40 at 240, 9600. The whole lot of 240 is gone. We have to still sell one. So that one we will sell at 250. Make sense, guys? What did we do? We are assuming, remember our assumption? Always we assume that whatever the inventory coming first will be issued first. Yep. Okay. Right. Then what is remaining, guys? We'll record. We have now 21 at 250, which is 4,250. Yep. Okay. Any questions with that? All right. Now we go to the 7. Cameron DS. Yes. Taking 2 cameras home. Right. 2 cameras taking home. Right. Now, what's the problem, guys? 7th. Right? We'll write 7. Memo 43. In or out? Out. 2 at how much? 250. What is left is only 250, so we are recording 250. Meaning, how many would we have now? 19 at 250, yes? For 750. Okay, guys. Next one. Now, 12th. Donald's studio return 5 of the cameras it purchased on 4th of May because the model was slightly wrong and were granted a credit of 550 including GST per camera. Credit note 21. Now what is happening, guys? Now this man, Donald, who is Donald? Not Donald Trump, hopefully, right? So that we sold, right? The cameras to Donald Studio. Yep. So what is he doing? He's returning. Remember, he purchased how many? 41. Now he is returning 5 of them. Now the problem is, at which price are we going to value them? Sorry? 240, all of them? Yes? Okay. All right. That's what I wanted to teach you. All right. So 12th, guys, credit note 41. Right? Now what is happening is this. Now look, that's where I wanted you to pay your attention to the note. Right? I have given in this one in the note. That is the valuation of, right, cost of sales for sales return under FIFO. So in FIFO, guys, right, that paragraph I will explain you, right. What we are going to do is, we are going to assume that the last inventory to leave the business is the ones that are coming first. So we call last out first in. That is what I call, right? Some teachers also I think may call it last out first in. You can say acronym is LOFI. Last out, first in. Why do we do that one? That's also actually practicing the FIFO, right? Last out, first in. That is also part of practicing the FIFO. Actually, we are reversing the FIFO. So that what will happen to the inventory card is, inventory card will come into a position that it would have been in if the transaction relating to the sales, if the sales transaction relating to the sales return has never taken place. Does that make sense? I'll explain you when I explain it, you'll realize it. Okay. Basically, what we have to value is, what we would do. The last out, the last inventory that was out. Under any transaction, it can be a memo. So that's why I gave you purposefully memo. This question I created. So purposefully I gave it to you. Right? Because the textbook question sometimes is not that advanced. Right? So then, because in the exam, you guys will have a question whether you are going to use this one. Yes. All the inventory, like any kind of transaction which has sent out to inventory, we can use, and then we are assuming that the last inventory that we issued is the one that are coming first. Now that means which one is coming first then? This 2 at 250. Then how many is he returning? 5. So that means still we have to value 3. The other 3 we can value at 240, meaning we are taking 2 at 250, the rest will be 1 at 250 and then go back. They are also 240, no problem. So then you are taking the rest 2 at 240 from this one. Make sense? But when you write it, guys, it's like this. When you write it, you have to write, okay, for the time being, right, you have to write, 3 at 240, which is 720, and then we record 2 at 250, 500. Now you can ask me,
240.
yeah, 2 at 250 underneath. Why? Now you can ask me why we record 240 first. Why? Why did we record 240 even though the 2 at 250 came first? Why? Because to follow the order of the prices. So what was the price that we had first? 240. So that we give the priority, right? We actually respect the elders. Right? No, actually, we give the priority to the earlier price. That's why.
Wouldn't you say on 250 then? Because it's like 2 and then 1.
Yeah. So because hold on. Right now, firstly we are taking 2. Yes. Right. That 2 done. Let's go on. Then we need 3 more. Because why? How many is he returning? 5 altogether. That means we have to record 3 more. That 3 we are using from this one. There's only 1 anyway. Sorry. My bad. That should have been 250. Sorry. It should be 2 at 240. Yep.
Yeah.
Sorry. 2 at 240. At 240 and which is 480 and 3 at 250. Yeah, thank you, Varun. Yeah, now it's correct. Okay, now I'll show you something. Now, what is the story I'm talking about? So, in the note, I'm saying something. What is it? Yes. So why we do this one, which we call this one reversing the FIFO, is why to bring to readjust the inventory card into a position that it would have been in if the sales transaction relating to the sales return never took place. How does that happen? Okay. Now for the time being, I just rub this part. Okay, now see what will happen. I'm going to show you, prove it, what is going to happen. I'll record this one here, 3 at 250 and 2 at 240. Yeah, that's what happened.
Yeah.
For the memo. Sorry, not my memo, the credit note. Okay, now I'm going to rub this one. Now see, on the 4th, he purchased 41 and he returned 5, meaning effectively how many did he purchase or did we sell? 36. That's the story. Now what we are going to do, assume in the first instance he and also I'm going to write this the balance as well. What was the balance here? We will have 2 at 240. The balance is 2 at 240 and 21 at 250. You know what I mean? Why? Because we got inventory 2 at 240 and 3 at 250. Yes. What will be the balance then?
This 22.
Sorry?
22.
Should be 22. Yep. 22 at 240 and 250 and 2 at 240. Yeah, this should have been the balance. Yes. Right. I'll write that balance here. Right. Now, what I'm going to say is, look, we are going to say that at the first instance he purchased only 36. And now we'll see what will happen to the balance. Right? Okay. So invoice 2076, I'm going to say he purchased only 36 at 240. Yep. Then what would be the balance? 4 at 240 and 22 at 250. Yep. Makes sense? Then the memo happens. What's the memo? That the owner takes 2 items home, which is we have 2 at 240 going. Why? We assume the first inventory that is going to leave our business according to FIFO. Then what would we have in the balance? 2 at 240 and 22 at 250. Then see, is it the same thing? It's the same thing. Now you can understand why we reverse the FIFO for the sales returns, right? Exactly for this purpose. Is it clear? Yeah? Clear? Okay, guys. Now we have, we'll record as it is, as usual, 40 to 40. Then we have 21 at 250. Right, then memo, 2 items gone. 2 at 250, 500, 19 at 250. Then the next one, we are getting the sales return, yes, which is on the 12th. Credit note 41, coming in or going out, in 2 at 240 and 3 at 250. Right? Then what is our balance? 2 at 240 and 22 at 250. Yep. Right. You guys are okay with that? Right. Next one, guys. 15th. Return to Fast Clicks the 5 cameras returned by Donald Studio for a total credit. Credit note A56. Now what do? We are returning back to our supplier. What we got returned? from our customer, which is on the 15th. Okay, that is going to be in or out, in or out, out, because we are sending it back to our supplier, right? Then what will happen is same thing, we are returning 480, 3 at 250. Then our balance is going to be 19 at 250 anyway, same thing. Okay. 19th. Purchase 36 cameras at 286, including GST, each from Fastclicks C786. Right, 286 including GST means how much is the price? 260. Good. So 19th. Hold on, guys. Don't write. Can you make it 30, not 36? Please make it 30. Purchase 30 cameras at 286.
Why?
I'll tell you why. Alright? Make it 30. Yeah, it's a typo. I did some changes. Somehow it hasn't been updated. Yeah. Okay, guys, what is it? 19th. Credit note. Sorry, not credit note. Invoice C786. In or out? In 30 times. 260. Which is 7800. So what's the balance, guys? 19 at 250 as it is. 4750. 30 at 260. 7800. Next one. 24th, yes. We sold 20 cameras. Receipt 98. On the 24th, we are selling 24th, receipt 98, 20 cameras. Then what will happen? 19 at 250, because we assume the earliest inventory will be the one that will be sold for 750, and then we have to issue one more at 260, yes? Right, then how many remaining? 29 at 260. Which is 7,540. Right. Next one, guys. 28th, yes? 28th, what is happening? Delivered 4 cameras to be used as display. Memo 37. Right? What is it? In or out? Out. Memo 37. 4 at how much? 260, yes? Which is 1020. Then we have 25 at 260, which is 6520. Sorry?
It's 1,040, not 1,020.
Sorry, 1040, yeah, sorry, thank you. 1040, 6500. Right, thank you. 6500. Right, next song. Sol 15. Sol 15. Right? Innos 89. So that is on the 30th, yeah? 30th. 30th. In out 15 at 260, yes? 0 9 3900. Yep. Then we have 10 at 260, which is 2600. Then 30th, then we have the last one, which is the inventory take. Reveal that there are only 8 cameras left. Memo 38, sorry, 31st memo 38. How many cameras left? 8. Meaning, what has happened? Loss, yes. So we are saying that it is 10, but now it is, they are saying 8. At which price though? 260. Very good. 260. Assume, okay, I'll just make it up just for 1 minute, okay? Assume we had let's say one at 250 and the rest 9 at 260. Then what will be our inventory loss? Still 260 both of them. We have lost 2. Now according to the balance, one is 250, 1 is 260. Interesting. I like that when I get different answers. Okay, so one is saying both of them are at 260. Another one is saying one at 250. What do you think? Or
Let's say if they lost 2 cameras. Wait, it depends on which one came first.
yeah. So which one came first? Yeah. That's the thing. Which one came first? 250 or 260?
250.
250 came first. Yes. Good. Right. What do you think, Kunal? So you understand the question? Yeah. We have, according to inventory card, we have 10, but inventory takes, they are saying we have lost 2. So at which price we will value the inventory loss? Pardon?
I think you take 2 260s out.
Both of them at 260. Christian, what do you think?
1 at 260, 1 at 250.
Yeah.
250, 260. Yes, that's correct. Why? Why is that?
250 came first.
Very good. Then when we lose also, we think that the first inventory is the one that has been lost. Okay? Make sense? Good. Alright?
But can I just like a hypothetical?
Yeah?
Wait, so what if the physical inventory take right? At the end, it said like there's 8 260s, right? But there's also one
At 250.
40. Yeah.
1 at 240.
Yeah.
That means it will be still inventory loss.
Yeah.
1. But technically, right, in the FIFO for now, we don't really worry about the price. We will count the items and we will follow the S5. Yeah.
Can you ever have like more at the end? than-
Yes, very good. Then what do you call it? Inventory?
Yeah.
Okay. Because you asked me, thank you, Harish. Because you asked me, that also I'll explain. Now assume this one we have 10, right? This one we have 10, meaning they are going to say us that look, we have got 11 in the inventory table. Then we have one at 250 and one at 9 at 260. Then at which price are we going to record the inventory gain? Actually, in a way, it is unfair to ask that question right now from you because I haven't explained that part. Why? Because it's in the way to count. Yeah, inventory gain. See? Right?
What
So-
is it 240?
240. All right, good. Any other answers?
Wait, can you say it again?
Yeah, my question is, yeah. So now we have now 10, right? We have 10. 1 at 250, 9 at 260, Krishan, right? Then the physical inventory tag saying 11, as Harish asked me. Then the physical inventory tag says 11.
Yeah.
My question, according to FIFO, if it was identified code, no problem. Or we can scan it, or we can check the secret code, whatever. It's labeled, so we know the price. Remember, as we did in the previous question. But this one, the problem. The problem is, which price are we going to value it? The inventory again. Which is it under 250 or 260? 260. 260. Interesting. 240, 250, 250. Actually, it is. There is a different rule for that. Right? It will be valued at 260. You know why? In FIFO, now we have a problem. The problem is we don't have exact cost price for that. So that our assumption in the FIFO is that the last inventory that made the inventory to increase, or the on the other hand, or I'll rephrase it, the last inventory that resulted in coming in the inventory is the one that has created us the inventory gain. So that we will
The last
value.
inventory gain.
No, not last inventory gain. The last inventory that came into the business. So the last lot, most recent one. What is the most recent one in according to our question? 30 at 260. This is the one that it has created as the inventory gain according to our assumption. So that's why we recorded that inventory gain at 260. Okay. All right, then we'll record this one, guys. Any other questions? So Memo is saying that we have lost 2, meaning we are recording it at 260, 520, 8 at 260, which is 2080. Right. Okay, guys. Now, when we do these two questions, anybody observed something? No. do these two questions. Anybody observe something with these two questions?
Which two questions?
Sorry?
Which two questions?
The question number 1 and 2, the one we did right now, and the inventory card we did on the identified cost. No? You didn't observe anything? Any weird thing, not really weird, something that you no?
This is what it's from one supply.
Sorry?
This is some of the supply.
No.
Sales.
No, no, not that. I mean, overall question. No? No?
The first one had like multiple cameras,
Multiple cameras.
like at different prices.
Yes. This one also you don't think? Same, multiple
This
prices?
one only had one.
No, that one also one, I think. Same thing, yeah, same inventory.
That one had 4 cameras at 242 and 215.
Yes.
Wait. Is it the cost of the
No,
original?
no.
Okay.
Okay, I'll tell you. Because she went to this one. So that means you guys haven't noticed that.
Right. This one's done in FIFO and the previous one is done in the other inventory. Yeah, identified cost.
Yeah.
Yeah, so the first one is identified cost and this one is FIFO.
Yes.
Yeah.
But what is the kind of similarity?
So it's shorter.
Sorry?
It's shorter.
It's the same question we did.
Oh yeah.
Yeah.
Yeah, you realize that? It's the same question we did. Right? So I did it purposefully. Right? And now we can compare the both methods.
What?
Right? Okay.
Wait.
It's the same.
Same question we did. Yes, we did the same question, guys. Now we can actually compare. Now, for example, right? Now, inventory loss. Firstly, how much is it? 520. What is in the other one? 500. Yes. Okay. And see, have a look at the inventory, the closing inventory. What's the total value, guys? The total value came into how much? 1,000?
980.
1,980. Good. What is that here?
28.
2,080. $100 more. Right? Now, if you compare the cost of sales, it will be the same story. It will be different. Why? That's the thing we are going to do. Let's write it. Shall we calculate the cost of sales as well? The sales will be the same, right? We saw the same thing, same selling price, sales revenue will be the same.
But the first one had a different physical inventory.
Different physical
Physical inventory.
count. What was the count?
4, 242, 250, 260.
What is the total? 8. What is the total here? Also 8.
Is it because we did reverse rule on the
Yes, that's another difference, correct. And also the way we are, valuing the inventory loss gain different. Yeah, because why? All of those happened. All of those differences came in only in FIFO. Because why? Because we use an assumption. But identified, no problem. We get the item, we know what the cost price is. No problem. We know exactly how much it is. Interesting. So you guys realize it was the same question?
Yeah.
Good. If you realize it, you also realize? Good. But when I asked you, no one told you. Right. Okay, guys. Now, shall we quickly calculate the cost of sales? Right? How much is the cost of sales, guys? Revenue will be the same thing, which is 35,500. Sales 35,500. Yeah, anybody calculated the cost of sales? You want me to write it here?
It's the same.
Same. Same cost of sales?
Yeah, same cost.
You sure?
Wait, no. It's the wrong one. $18,030.
18,000?
18,030.
18,030. Others also got the same thing? Right? Or everyone got the same one? 18,030. Okay, now we have to do, guys, the difference between these ones, which is in the actually the note. Shall we do it now or later? Yeah, we'll do it this one. Firstly, yeah. Usually, what will happen is, now we'll do from here then, physical inventory count. If you're done with this part, then let me know. Okay, guys, we'll quickly do this income statement thing as well. So, how much is the gross profit then? 74, 27,470. No, sorry, 17,470. And then our inventory loss, which is 1,040. Yes. No. The 520. Right. Then as a result, how much is our adjusted gross profit? 16,950.
So we record all of these in the income statement.
Yes.
Separate.
Yep.
As expenses.
Yes. Yeah. Don't worry about the format. I will show you the format when we do the.
Profit like a good thing.
Sorry.
Isn't profit like make money?
Yeah, profit is yes. What is what is left over after taking away all the expenses from our revenue? Yeah. So any questions with that? No? Right. Then okay guys. Yeah, then with that,
The gross profit adjusted
yeah.
will go into the income statement
Yes.
as a.
Yes. This is anyway in a part of the income statement. So what we did is basically the first half of the income statement.
Wait, it's part. Wait, so it goes as an expense.
Which one?
This one or revenue?
Which one? This one is the top part of the income statement.
No, it's gross
Part
profit.
of it.
Gross profit.
Yeah.
Yeah. It is a part of the income statement. That is what we report firstly. Okay? Okay guys.